disappointing performance today.
Yeah, it's been a very interesting day. A lot of news flow, a lot to take in, a lot to think about. I mean, we had a very negative opening this morning, and then we plodded around about 33,750 for most of the afternoon.
We're actually off our worst levels.
We're off our worst levels. I think that was really due to the more positive news than we expected coming out of America. There were three big chunks of news: the job data that you mentioned, as well as the housing starts, but also the inflation data was better.
The PPI numbers, actually.
That was a little bit better than expected as well. So it looks like inflation looking a little bit more benign there, which is exactly what the American economy would want at the moment. So that little bit of good news put the American Dow Jones into positive territory, which was completely opposite to what it was looking like literally a few hours ago. Yeah. Looked like a negative opening, and that helped markets from about a 1% negative to about 0.9 at the close today.
Let's look at this top 40. Anglo Gold is down 4%. It was down in yesterday's session. We had results out from Anglo Gold Ashanti. Profits surged.
Pretty good results, yes.
But headline earnings down, actually.
Correct. So. Well, I think if we look at the entire top 40 and we take the top couple there, we've got Aspen positive territory. British American Tobacco does form part of the top 40 now as well. That was pretty positive. Naspers and so on. But in general, it was more your defensive stocks that did very well there. Old Mutual obviously up. The expectations there for a big special dividend out of the sale of their Scandinavian operations. But in general, fairly negative across the board. I think it was just a matter of risk. Greece was a big issue last night that followed through into markets this morning. So major stocks that are very volatile, such as your gold stocks and platinum stocks, taking the biggest hit. So it was a risk adjusted situation.
You mentioned British American Tobacco. That's actually up 1.5% today. So essentially, best performing stock.
I mean, if you look at British American Tobacco, if you've got a really negative day on the stock market, that stock tends to tick up, and the opposite. It's one of those interesting defensive stocks that are great to have in your portfolio as a hedge.
Let's touch on Impala Platinum, company out with results today, and also just continued worries and concerns coming through from Rustenburg.
Yeah, it's just, I was reading those results and I was having a look at it, and it doesn't matter from what front you look at it. It's just disastrous, unfortunately. They've got the rand to concern themselves with. They've got the actual price of platinum that is very volatile to concern themselves with, wages, stoppages, electricity prices. It really is difficult for this company to really continue business, in my opinion. It's just so difficult. It really comes down to cost per ounce of platinum, and unfortunately the cost is almost equivalent to what they can get for an ounce of platinum. They're just not pulling in a big enough profit, and they've got so many obstacles to overcome. It's just very difficult for them to do business.
And Impala Platinum, it's down around 4%, but it seems to still be favoured when you look at it relative to Anglo Platinum.
I think really because if you look at the cost per ounce of platinum, Anglo Platinum is even more worse off than Impala, and work stoppages on Impala aren't as bad as Anglo Platinum at the moment. But the sector in general suffers from the same kind of issues, and the share price is really indicating that it's a completely no-go area at the moment. I think there are a couple of investors out there that do consider Impala and Anglo Platinum as deep value plays. And there's a fair argument out there that at current prices you are pricing in the worst. But I think it'll take quite a lot of recovery in those variables to really make it a worthwhile investment choice. I would really be very wary of actually putting any new money into Impala, Anglo Platinum, or any platinum play at the moment.
What about the food retailers? Woolworths out with results
Absolutely,
today.
It's just spectacular.
It's down 2% though, Nicholas. What's going on?
Well, it's up 100% since February last year. So I think generally, I was wondering you were going to ask me this question. Woolies down on great results, but Impala Platinum down on really bad results. I think it was just a general sell-off in the market. So even if a company released incredibly good results, today they would be down. But again, you need to understand that Woolies has run very hard. The results are good, but they are for the last 26 weeks, the last 6 months. And looking forward, things are looking a little bit more uncertain. You can see that reading the management's point of view. They do expect the same to occur. However, to keep up that kind of share price, you need to keep on coming through with really good earnings per share increases. So what I'm saying, though, I think the share price is priced for perfection, and I do think that a couple of shareholders might be taking a little bit of profit. 100% return in a year is very good.
I mean, the CEO, Ian Moore, I spoke to him a little earlier at the results presentation, and he was saying, they're going to be opening up a Woolworths mega store, 2,500 square meters. on William Nicol Drive, same destination as Pick n Pay as well. The retail space, it seems that a lot of innovation is coming through.
Correct.
Walmart is in the market. It seems that more market share wants to be taken, despite the fact that Woolworths, for example, has niched itself in such an interesting market, LSM 8 to 10.
It's a very good point. I think the most important point here is increased competition, and you really have to lift your game. I mean, Pick n Pay's been really struggling to do that. Walmart coming into South Africa could potentially change the space completely. Rival companies such as maybe Woolies and ShopRite and so on, they realize this and they have to up their game as well. So the concept of introducing a mega store like that is very interesting. It's exactly in line with what Walmart would probably continue to introduce, and is exactly what Pick n Pay did as well. So I think increase in competition is great for us as consumers, but it makes life a little bit more difficult for retailers at the moment. And with such very heady share prices currently, I do think there could be a little bit of a price war out there at the moment, which would impact margins going forward. So looking forward, I think the space will be interesting. It'll just be a little bit more difficult for them to do business, that's all. So I would be a bit hesitant to jump on the bandwagon now.
Yeah.
I think it's a little bit late to do that right now.
All right, so let's also touch on the overall resource space.
Yes.
Still trading at very attractive PEs. And interesting, the top 40 index hasn't hit record levels.
Correct. If you look at the, just the index for resources, we're still below our highs that we had when the JSE was at 33,000 points in 2008. So one does argue, with a PE of 8 or 6 or 7 in some cases, that's way below market average, and surely we should jump on the bandwagon as well. But it does come with quite a few caveats, that story. You have to be very careful at the moment. World GDP is still under pressure, and that has a direct impact on your diversified resource companies. So I would be a little bit wary when jumping onto Anglo's and Billiton right now. I know there's a good story with corporate action potential on Anglo American, but I would still look at your bulk commodities, your iron ores, your coal and your copper companies, and go for those. I think there's a lot of value there, and be a little bit hesitant on going for your diversified miners at the moment. So it's not a rush into it. I certainly agree with you. There's a lot of value there, but it's the bulk commodities that I see the most value in.
So what is looking expensive, and what actually drove the overall JSE all-share higher, is the industrial sector.
Correct. It was the South African breweries at 311 rand all-time high.
Can we sustain these levels? Are we expecting a bit of a dip going forward?
It's a good question as well. I mean, is SAB worth these levels? And if you look at those numbers and you look at the expansion that they have at the moment and where they are situated, absolutely. If you look at Naspers as well, it's closed about 400 rand again, right at the top at the moment. That has a huge impact on our market. Is there more upside there? I mean, if you believe in the growth in telecommunications and internet and so on, absolutely. It's the same with Richemont as well, luxury goods demand. So I think there is momentum there, but I do think right now we are looking a little bit expensive currently.
Nicholas, thank you so very much for joining us. Great to have you on the program.